Welcome all of you. In this class, we are going to learn about final accounts of partnership firms. In the last class, we learned about partnership. We came to know how it will be moving on and those things. So here we will be seeing about the account preparation. So when we talk about final accounts, it is more or less similar to the final accounts of sole traders. But what's the difference? Let's see what is it. So we may prepare a manufacturing account if it has a manufacturing unit. Then we'll prepare trading and profit and loss account. Then we have a special thing here called as profit and loss appropriation account. I'll explain it a little bit later. Then we'll be preparing balance sheet. So now let's move on to profit and loss appropriation account. Actually, when you talk about sole traders, when we prepare trading and profit and loss account, the profit or loss is transferred to the capital account directly. But here we have partners. We have two or more persons. So what we do, we transfer the profit or loss which we get from the profit and loss account to the profit and loss appropriation account. So here in the profit and loss appropriation account, certain adjustments are made regarding interest on capital, interest on drawings, commission, remuneration, etc. So after doing those adjustments, then we come to the profit or loss, and that is then transferred to the partner's capital account. Methods of maintaining capital accounts. In partnership firms, we maintain capital accounts in two different ways. The first one is fixed capital method and the second one is fluctuating capital method. Even from the name, we can bring out certain things. First, let us see fixed capital method. Under fixed capital method, we maintain two types of accounts. The first one is capital account and the second one is current account. So what is capital account? So in capital account, we maintain only the virginal capital, and if any addition of capital is there, we show over there, and if anything is withdrawn completely, then we show over there. So the account will always be fixed. We'll have a fixed amount throughout the year. And what about current account? So in current account, we show all the other adjustments like interest on capital, interest on drawings, remuneration paid to the partners. So all the things that are related to the partners will be shown in this current account. And when we come to fluctuating capital method, we maintain only capital account. So the virginal capital introduced, additional capital, and also all the adjustments, interest on capital, interest on drawings, everything is put in one account under fluctuating capital method. So the value varies every year. That's why we call it as fluctuating capital method. So let's just understand the difference between, so that it will be easy for us to work out with the problem. So what is the difference? Basically, in fixed capital method, we'll have two types of accounts, that is capital account and current account. And in fluctuating capital method, we have only capital account. And when you come to fixed capital method, capital account will always show a credit balance, but current account may show a credit or a debit balance. When you come to capital account in fluctuating method, it will show either a credit or a debit balance. So this is how it works out. So we'll do some problems so that we'll be able to understand the concept more.
Before working out the problem, let us see the format of partners capital account under fixed capital method and also the format of partners current account, which will help us to work out the problem in an efficient manner. Format of partners capital account. Partners capital account. As we know, capital account shows a credit balance. So it is shown on the credit side. Then additional capital is also shown on the credit side. Then on the debit side, we have the permanent withdrawal of capital. When we balance, we get the balancing figure as the capital of the partners. Here, if you see in this format, A and B, that is for two partners it is given. If there are more partners, then we can add up in the same account, or for convenience purpose, we can do it individually also. Next is partners current account. So in this format, you can see the balancing figure are shown on both the sides with this star pointed out. What does it mean? Actually, we clearly know that a current account can either show a credit balance or a debit balance. Then let's see what are the things on the credit side. Interest on capital, salary, commission, profit and loss appropriation account. That is, if it is a profit that comes from the profit and loss appropriation account, then it will be shown on the credit side. If it is a loss, then it will be shown on the debit side. Then also on the debit side, we have drawings and interest on drawings. Yes, obviously the balancing figure, we may get a credit or a debit. Both are possible. Any one of the thing is possible. Let's work out a problem. From the following information, prepare capital accounts of partners Shanti and Sumati when the capitals are fixed. So in this problem, capital on the, that is opening capital is given, current account is given, it shows it's a credit balance, then additional capital introduced during the year, drawings, interest on drawings, share of profit, interest on capital, and salary of Shanti and commission of Sumati are given. This is a solution. As we know, it's a fixed capital method. So we'll be preparing partners capital account as well as partners current account. So in the capital account, let's take the balancing figure, that is 1,80,000. There is an additional capital in the problem. So that is 10,000 and 20,000. Then we do the balancing. So balance is 1,10,000 and 1 lakh. There is no permanent drawings. That's why we didn't show anything on the debit side. So next is partners current account. As in the question, it was given, it's a credit balance. We are showing on the credit side as 5,000 and 3,000. Also, it was given share of profit. So by profit and loss appropriation account, it is 10,000 and 8,000. And interest on capital, salary of Shanti, commission of Sumati is all shown on the credit side. Moving on to the debit side, we have drawings. We have interest on drawings. Yes. Then balancing figure gives partners current account. Hope you would have understood. Let's move on to the next. Here we have fluctuating capital method. So under fluctuating capital method, we'll prepare only capital account. So partners capital account, let's see the format. By balance brought down, by cash, that is additional capital introduced, interest on capital, salary, commission. If it's a share of profit, it is shown on the credit side. If it's a loss, it will be shown on the debit side. And we have capital withdrawn, drawings, interest on drawings. So the balancing figure will be shown on the debit side. But we should be very careful. Here in this method, we can get both the balances, either credit or debit. So let's work out a problem. From the following information, prepare capital accounts of partners Mannan and Sevagan when their capitals are fluctuating. So capitals are fluctuating, so we are going to prepare only capital accounts. Opening capital, credit balance is given, drawings is given, interest on drawings, share of profit, interest on capital, salary of Manan, and commission of Sevagan are given. Let's work out the solution. Partners capital account. As in the question it was given, it is a credit balance. We are shown on the credit side as 2 lakhs and 1,75,000. Share of profit 21,000 and 16,500. Interest on capital, salary and commission. Then on the debit side we have drawings, interest on drawings. Then we do the balancing work. We get the balancing capital, partners capital account. So it's quite easy if we could understand the format and also the concept. We'll be able to work out problems in a very easy manner.
In this class, we learned about methods of maintaining capital accounts. We even did few problems. If you have any doubts, you can post it in the comment box. In the next class, we'll be learning about how to calculate interest on capital and interest on drawings. Thank you.